What's going on, guys? Welcome into today's show. We've got Christopher Long, who's got a great story and an investment strategy that you don't hear too much about. He took his very first investment in this space from a $200,000 investment to a $2.4 million profit. And you're going to hear all about that story. He started out as a contractor in need of storage for some of the big stuff in his own real estate business, equipment, materials, things along those lines. And that was where he founded Longyards Storage. He ultimately is somebody that, began in single family real estate and quickly learned that he didn't want to be dealing with the tenants and dealing with a lot of the headaches that come along with owning, real estate where you've got people inside of your properties. And so he really found this own personal problem and leveraged it into a business model that now he is scaling internationally. Really cool story, very kind of simple framework that I think many people will easily be able to wrap their head around and understand. This is why I love real estate. There's so many different ways you can make money through real estate investment. And this is a strategy that you can do yourself and or partner with people like Chris, which you'll hear all about in today's episode. So without further ado, let's dig into today's episode on storage yards with Chris Long. Chris Long, welcome into the show, brother.
Thanks, Matthew. Excited to be here.
So how did you get into storage yards? That is a very niche strategy and one that I actually have got a couple of buddies that own trucking companies that have decided to start buying some of these for, some of they have, a little bit of larger fleets and they started to get more excited about the cash flow of the storage yard than they did necessarily their trucking businesses. So was curious how you broke into the space.
Right. Yeah. So it's funny, like it's massive when you're in the space, buddies like truck parking, you hear about it. This is a big problem. But what's a bigger problem that we actually aiming to solve is the fragmented clientele that needs smaller to medium-sized yards. And that's what Longyards is aiming to do. We solve the problem of short and medium term yards for rent, for lease, 2 to 20,000 square feet. So it's a lot different than truck parking. So as an example for listeners, like what storage yards? Like I get it, a yard you store stuff, right? That's the first thing. But no, picture a 10-acre facility, my first location is quite literally a long yard. Okay, it's 200 feet by 2,000 feet. It's got a road in the middle, and we have 67 small to medium-sized yards that we rent to small businesses in the facility. So how did this start? It started by me being a contractor. I needed the space myself, started it up, and now we're expanding internationally, and we've created unique business models with creative solutions to solve this problem. So happy to dive into it, whatever direction we go.
Very cool. Very cool. Now, maybe we'll just get into some of the nuts and bolts of, kind of how, maybe talk about your first deal. Like what did your first storage yard look like? You kind of mentioned a little bit of it, but like, how did you decide this was going to be an investment strategy that you felt made financial sense for you to pursue?
Well, great question. So, I started off in real estate. So I bought a house, turned into a duplex, love the cash flow, love the gain, right? Get mortgages, get people to pay down your mortgage, cash flow, you're making money, and it's just asset, cash flow plus wealth creation. So I always knew that foundationally. But then I had tenants that were giving me hard times. I was like, man, I gotta play the same game just differently. So, it all kind of merged in a perfect storm of me needing the solution for myself, but also having the educational background and of real estate. So my first deal, I bought it for $470,000. All right, I put in just enough to bootstrap it to get it going, which is around 200 grand. Then I had an investor come in and bootstrap the rest with me. And I did it as a simple debt structure. So he put in around another 700 grand, right? So I'm in around 1.1 million total and 200 out of my pocket. I then got appraised for 3.6 million, right? Got a mortgage, took out my investor, put money in my pocket. Now I own it 100%. It cash flows 40 grand a month. And that was my first storage yard business. So that's pretty much it in a nutshell. And now I'm like, I like this. I'm going to do this again and again and again, except we're now doing it with partners and we do a profit share to go bigger and farther. You do it with people. So that was my first location. And when I turned 200 grand into 2.4 million in a short period of time, that's a pretty good return, man.
Not bad if you look at the ROI and the equity multiple on that. So was this just a raw piece of dirt, or what was your kind of criteria as you were thinking about the financial model, what this could be? What did you need kind of the buy box and the criteria of the site and the location to be in order to pair well with that, strategy for generating the income you saw on the pro forma?
Right. So it started off like me being a carpenter, right? I bootstrapped. And when you're a carpenter, only tool you have is a hammer, everything becomes a nail. So with my first location, I wasn't like thinking about so high level demographics, data, buy box. I was just like, here's a property, it's zoned what we needed to do. And we're going balls to the wall. And it was 8 minutes from my house. That was like phase one. Now I've built a business to build multiple of those businesses. So my buy box is a lot more defined now. And that looks like demographics, income. We've built a full feasibility tool, which allows us to underwrite what a storage yard looks like. And there's so much data that we've been harvesting because we have a big vision and a big audacious goal to make this international. So the buy box at the beginning was like, I need it. Is it a drivable distance to somebody else? Sure enough, that's what worked. And that's how I built it. But now it's gotten a lot more evolved. We have a full funnel and it's just super exciting.
And this is just raw dirt, essentially, right? That
It can be. So for context, we have in our feasibility, we have like a tier 4, tier 1. Tier 4 is like a forest, slow, painful. You pay less, but you got to do more and take time. So then it goes to goals. The buy box is really tied to your area and your goals. And then on the quick and dirty side, it's like tier 1, a continuation of use. Picture a truck parking lot. Right? And by the way, truck parkers, we make more money on our land than truck parking. Yes, it's a thing. I love stirring the pot and making fire, but that is factual. And we make more per square foot. So, if you take a picture a truck parking lot, and we'll go in, and that's what we call tier 1, something that's ready to go. So the buy box, because we're solving such a big problem, and industrial real estate is so scarce and so narrow, if you're only using one buy box, the deals are going to be very far and few between. So not only do we have to get creative with the land acquisition, but we have to get creative with the landowner. And it's not just buying, we lease and we partner with the landowner. So we're really creative on how we're solving this problem because frankly, we have to be.
So what would you say is the difference for those that don't know between truck parking versus storage yards, and how one is more financially lucrative than the other?
Right. So there's pros and cons to anything. Like if I talk to a multifamily guy, they're gonna like if I say anything's better in multifamily, then I might get gunshots coming through my house. So truck parking guy, they love, they're advocates for their truck parking. So the pros and the cons, it's first of all, one's a little bit more known in the marketplace, even though it's becoming a little more known as what's called IOS, industrial outside storage. Um, and it depends on your strategy. Are you going after like a larger company that wants 5 acres and it's a, triple net A-class tenant, or are you doing like shorter term uh, co- contracts with truck companies indirectly, which is more management? But so on a few high levels, you have less net rentable square footage. Truck parking requires a lot of space. You got to move these things around. Also, the strength has to be extremely compacted. They're very heavy. So you have a lot of dead space and it takes a lot of weight to move these things around. So you need like they can't go after many industrial properties. They have to be designed in a certain way, which in most cases, most properties, if it's a square rectangle, they can make it work, right? Where our model is a lot more creative, where give me a messed up piece of land that just has power and I'll make it work, right? We have more net rentable square footage. We need a road and the rest. If you just think about it like a zigzag, like we could put a road in the middle and chop it up and we creatively make the highest and best use for that using storage yards. You can't do that with truck parking. In a lot of cases, you're gonna need to even think about how you turn around truck parking. So we don't have these logistic limitations. And our build out is a little bit more, right? Because we're doing the fencing internally, but we also drive more revenue and we have more net rentable square footage. So in terms of iOS, we just squeeze more lemon from the juice, right? Because the real price of real estate is so high that sometimes just doing truck parking is not enough. So you really need to be creative in order to take these deals down from an investment perspective. So, from logistics, and we also have, in some cases, less tenants, right? You have in one yard, you're going to have 5 truck parking tenants. So on 10 acres, I have 67 yards. And you would have a lot more truck parking spaces. So, there's a lot of pros and cons to each, but we're laser focused in ours. And that's what we're finding right now.
Very cool. So take me back to the beginning real fast before we kind of get a little bit more technical on some of the storage yard stuff. Like, what was it for you that you were obviously investing in real estate, and you decided that you wanted to pivot out of kind of the single family space and really start looking at different commercial models, looking at all the different models that were out there. Why this one?
Well, it's a really good question. I always loved storage, but I kind of hated being like everybody else. So like I didn't want to be just doing the same thing everybody else was doing. I always wanted to build something a little bit different. Um, and this was unique because I was the best avatar. Like I knew exactly what my client needed, how they communicated with them. Like being a blue collar guy, I was in the trades. I'm a licensed carpenter, been in construction for 10 years.
Yeah.
So this made a lot of sense for me to solve this problem, being the perfect problem, the perfect person that needs the problem solved. So then I built a business around the avatar of a guy like me. And that became very foundational. So, and then it had all the other metrics. It was diversified. I can lose my top five paying tenants and still cash flow every month without stress. It was simple to understand. The worst thing that can happen is land gets contaminated. I'm in control. If someone doesn't pay, the gate automatically locks them out, right? There's no landlord tenant board. I own their stuff. So it has all the advantages to self storage, all the perks, the same model, but it's very unique in the market sense where it's different, but it's also a big supply and demand. But on the flip side, it's really challenging. So, going into it, there's a lot of thought, but it was like, beginning, it was like, if simple, it was like, if I need this, other people do. Sure enough, we leased up in 5 weeks. Then the rest is history for the first location. So, the thought process and skill set has evolved, but at the beginning, it was like simple minded. If I needed other people do, and then boom, I was really on to something.
So you found your site. How do you go about marketing and attracting, the right tenants that are leasing those spaces from you guys?
Yeah, that's hard because no one knows this exists, right? No one's searching it like self storage. They don't have the pain point. They
Yeah.
have but they don't know the solution exists. So it's an education process and it takes time. We have to season the marketplace. We really got to get out there. And we do that through like different guerrilla marketing strategies. And we really got to be extremely creative of how we market and lease up. It's a lot different than anything else out there. And that's what's unique about our model because we have it dialed in. But there's a lot of different strategies. And each market's a little bit different because it's adaptable, right? So your yards actually move around based on whether you're in a more seasoned marketplace or more up and coming marketplace. And your clientele and your avatar actually changes. So the marketing strategy and copywriting changes for that. But at the end of the day, like, we're really aggressive with the marketing and lease up. So a lot to expand there, but we've got it covered.
And is that coming through Facebook marketing? You guys doing PPC? You guys are doing, sounds like postcards, like a variety of different tactics for your targeting blue collar businesses, truck drivers. What's kind of the avatar of your tenant and how you're getting in front of them?
Right. So we definitely stay away from truck park. We have no truck parkers in our property, and I'm happy to say that because it's just we won't deal with that. But
Yep.
yeah, it's your question. It's a little bit of everything, right? And in certain areas, we find a stride and we hit that stride, and then we stick to it. So whether or not it's Facebook, Instagram, price per click, um, flyers, there's a whole bunch of different strategies. But each market we've been finding that there's not one that is like the Hail Mary. It's a bunch of silver bullets consistently, but we just dial it in and get better with the data from the previous learning to improve it as we go. So it's a little bit of everything.
And in terms of kind of demographics that you want to see, right? I'm assuming that you're not just buying some random piece of dirt out in the, middle of the sticks, right? There's probably some level of demographics and criteria that at a bare minimum, if somebody were thinking of looking at this type of strategy and, depending on where they live or where they have access to opportunities, what are kind of the bare minimum criteria that you guys like to see that need to be there for this model to be viable?
Yeah, like a population of at least 50,000. We're definitely not like mom and pop stick in the woods. I got a great deal on self-storage facility. The population is like 3,820 miles. It's like,
Right.
So you need to be where the problem exists, where people don't have land to park stuff, right? That's the number one problem. So HOAs and other zoning regulations come strongly into this as well. So it's demographics. Then we go to the property buy box. And then the property buy box has, the high level stuff. You want close to a highway, close to the arteries, the right zoning, and then it goes zoning, and then local building requirements. Because even if it's zoned right and it looks right, then you go to the city and you're like, hey, that's what I want to do. You could be battling for 1 to 3 years just to do what you want to do on your own land. So we go through filters just to avoid all of that. And then it goes to our actual feasibility underwriting, and then it goes to our pre-leasing. So there's a whole filter, but I mean, high level, arteries, zoned right, population of no less than 50,000. That's for now. But we're going to expand that after we test more markets.
Nice. And what's the zoning? Some type of industrial, light industrial, flex.
Yeah, it changes. It changes in your market, but like the highest level is like heavy industrial. For in most cases, if it's HI, then it's light. Then you have commercial, and commercial has different classes of codes that you need to do your due diligence on. Typically, you have more loopholes that you got to dig through. Certain business zonings will work. You can do a PDU, or planned unit development, PUD, but that can take a long time. We did one; it took 2 years to go through the zone, and it said outside storage. Then all of a sudden, triggers and site plan approval, this and that. So the zoning is like a whole process in itself, and we've built through R&D the database in our top markets of all the codes that we need to use to that work specifically for our model.
Nice. And in terms of financing for these, how are you kind of putting together the capital stack on a project like this? Because it sounds like this isn't all enclosed or covered storage, right? This is all exterior open air storage with just proper fencing and parceling off of how you put together the site map.
Right. So if you talk to a bank, they're gonna just you might as well talk to the wall. You'd be like, yeah, I want to do a storage yard and iOS, and unless they've done 5 of them, they're not going to help you.
Yeah.
So that's been the bank. It's funny. We just closed on a $3 million deal, and we use SBA. So we bought it for 1.
Okay.
The build out was 1.4. So we're buying industrial land that's worth $3 million and putting $300,000 down. That is and we could buy raw land and buy it using only 10% down, including all of our build out and development costs. So right now, we're on the SBA directory list. We got approved by the SBA because we're a small business. We check all the boxes. We support this community. So that's what we're doing. And to creatively solve this problem, we partner with people that sign on the SBA, and then we do a profit share partnership. So that's our solution. We're just going market to market, finding great people in great markets, putting them together with a great deal, or go after the landowner directly and do the model. But right now, it's either you raise 1.5 million for the $3 million property with the bank or whatever, or we do 300 grand with SBA. So that's what we're doing right now.
Very cool. And are you guys doing any creative financing deals? I know you said you're either partnering sometimes with landowners, you're partnering with, other potential LPs or equity partners. Like, how are you guys kind of structuring these deals and getting creative a little bit?
Yeah, so I don't want LPs. Like we're not playing that game. I did have my first syndication. I don't want to write a book on syndication storage or ever. And it's funny because we're in like the bit of a pocket of like anywhere from like 2 million to 5. It's not really big enough for a syndication. So it doesn't really make sense. That's why we went to the joint venture model.
Yep.
So yeah, like if the LP is just not interesting for us, and that's why it's really clean. It's like 1, 2 people, maybe 3, and then we'll go take down a deal. That's it. We don't need more people. We don't want more people. We don't need to complicate our lives. And then we're staying away from all of the SEC laws because, a joint venture of 5 people on a certain amount, it's a lot cleaner as well. And that's the way we're doing it. And then if it's a landowner directly, then we just negotiate based on how much work how much work the property needs, how well capitalized they are. So it's either we have it done with you or done for you model. And if they don't have the money or the time, we bring in the partner with the money and the time, and they just get less money every month from the cash flow profit share. If they have money and time, here, we'll give you the cookbook, and we can even manage it for you and put it underneath the Longyards umbrella. So we're getting really creative on how we're doing that as well.
Nice. So you guys are potentially offering to, and are you kind of locking up some of these pieces of dirt and taking it through entitlement during DD and obviously increasing the value of the dirt before you close on it and allowing owners to roll some of their equity into the deal? Or are you kind of just closing on it real quick and then taking it through the process?
Yeah. So like, there's 2 hats that I wear. And when I started Longyards, I was wearing a real estate hat. Because the story I told myself was, I turned 200 grand into 2.4 million off one deal. And that's great. But now to go bigger, our cash flow on an enterprise value is actually worth more than the appreciation on a single asset. So focused on cash flow, we're focused on enterprise value because we're building a bigger company. And we're raising safes, and we have equity partners and investors coming in. And, we have a bigger vision than to focus on one deal over 3 years, do a $3 million, asset creation. And, we're talking like tens to hundreds of millions of value creation on a larger scale. And our strategy for that is a lot different. So we're raising capital and we just finished our first round, and we're going to be raising for our next round, and we have different gears in motion to support a high valuation. So we're just playing a different game. I could have played the syndication game. We're doing the joint venture, and we're also raising capital to build out our internal team and to build out our systems and just be more efficient.
What's been is the best deal the 200 to 2.4, or what's the best deal that you've ever done under the Longyards brand?
That's a good question. So, we're trying to measure that for a unit of time versus a lifetime value. And I put a lot of time into that deal.
That
Now,
first one.
with the skill set and becoming a better CEO, there's different levers and gears I could pull. And, we can now put in a certain amount of time on a small deal and make a long lifetime value. So, measuring it against time versus income, it's good, but it's not the best. So it's funny because the little smaller deals, or a mid-sized deal will actually bring a nicer cash flow return for the amount of time spent with the right structure, with the right partners. And we're still new, right? Like we're still at like our infancy stage. We have 10 locations in the works. We're growing. We have a big vision, a great team being built out. So the data for each location is still coming in, and obviously that'll keep improving. But the first one was still like the flagship. It put Longyards in the map. But it's been a complete shift of mentality, mindset, skill set, where the highest return now is based on unit of time, and that's actually a small to mid-sized deal that's quick and simple. So, yeah.
Nice. And what is the big vision for Longyards? I mean, you mentioned international. You're talking about, obviously 10 growing into, I'm guessing, many hundreds. Is this something that you're looking to, package up and sell off to private equity, or what is kind of the big grand vision for what you're trying to create?
Yeah, when you think of a yard, you think of Longyards to rent, right? Like that's one of the visions. We want to be a leader in the industry. I don't really have like if Stu comes knocking for private equity, and we actually get emails like once in a while private equity already, and we're just getting started. I'm not even promoting. I just do these podcasts.
Yeah.
Well, I mean, it's not my vision to sell to private equity. We're solving a big problem, and a lot of time for private equity just comes back to your return, and it's not what's actually best for the people or the business. It's what's best for the investors. And so there's a big gap that a lot of people don't recognize that ends up happening, and the people get squeezed, and the investors want their returns, and then they kind of ditch it, and the next person will come and squeeze it. So like being a great operator, the CEO is kind of putting the clients first and building a great business. That's my focus right now. Building a great team, offering a great product service to the marketplace. And I'm not really focused on anything else because frankly, I have to be laser focused on that in order to fulfill that vision. So right now it's build a great team and just keep doing great locations and great partners and keep going.
Is there any certain numbers or metrics that you guys are trying to hit? A certain amount of yards, a certain level of cash flow, or is it just kind of like you said, keeping it simple and focusing on those two main things: team and servicing your investor partners?
Well, it's a little more than that. We did integrate EOS, and we have roles with the IDS, and we do our weekly level 10s, and we have our metrics and we're vertically integrated, right? So we'll find the dirt, we'll develop construction in-house, manage, lease up, profit share. We're a full turnkey developer. So we have a lot of key metrics in order to stay on track for all of that, on profit, on track, how many LOIs we submitted, how many lease negotiations do we have going on. So based on our 10-year, 5-year, 3 and 1, yeah, we track that really, religiously right down to the week and making sure that everything's staying on track.
Nice. All right. So I got one question for you that has kind of been floating around in the back of my mind. I think of like storage wars, right? And when somebody doesn't pay their rent, and then they get their space foreclosed on, and then somebody goes in there and finds something great. Have you guys run into any of those situations where you've got tenants who don't pay, you seize their stuff, and you found something cool?
That's fine. We just drop a bomb on the property. Boom. Problem solved. It hasn't been that crazy, man. Like, because we got to follow in Ontario, you got to follow the lien laws. So you got to follow the process, and whatever you sell, you got to give back to the tenant any surplus. So, I mean, the biggest pain in the butt sometimes is a vehicle, like the ownership. So we got to go through a few hoops to make that happen. But there's been nothing like a dead carcass or like a gold bar that we found that really makes an exciting story. I would like that because it would definitely make a fun podcast.
Yeah, it would.
I'm happy to say nothing crazy yet, which is kind of a good problem. So
Yeah, for sure. Now, are you ever taking investment capital outside of what you're doing and investing and diversifying into other asset classes or other vehicles? Or are you just all in on Longyards and keeping everything consolidated and focused in that one vein?
Purely Longyards, 100% laser focused. And honestly, to solve this problem, I have to be. So right now, that's it. I don't look anywhere else. I mean, I see what's going on with truck parking and anything related to my field,
Yeah.
horizontally, but that's it.
It's awesome, man. Well, I know a lot of people are going to want to know more about what you guys got going on at Longyards, whether that's, investing in one themselves and partnering with you, or just learning more about the educational side, which I know you got a lot of great content on your YouTube channel and putting out consistent stuff. Where is the best place for people to learn more?
Yeah, just go to longyards.com, fill out a form, and we'll be in touch and keep it simple.
Chris, thanks for coming on the show, man.
Thanks, Matt.
Well, that wraps up today's episode. Thank you so much for tuning in. As always, you guys know this show would not be what it is without you, the amazing listener, the support, sharing this out with other people who can gain value from it, taking 60 seconds to leave a review. If you haven't done so already, those things mean the world to us and ultimately help us spread this message out to as many people as we possibly can to help them on their wealth building journey. If you have any particular links or resources that you're trying to track down that were mentioned in this interview, be sure to check out this episode at millionairemindcast.com, where you can find access to all that information. And of course, if you haven't checked out the Wise Investor Vault yet, be sure to head over to wiseinvestorvault.com to check out all the tools, all the resources, the checklists, the spreadsheets, the trackers, all kinds of amazing things that can help you on your wealth building journey at the wiseinvestorvault.com. If you haven't connected with me on social media yet, I'm consistently putting out more content, stories, value to help you on your wealth building journey. And one of the best and most exciting things for me on a weekly basis is getting to connect with you guys. Getting your DMs, hearing what things impacted you, what you need help with is a big way that we continue to drive the content for this show. So if we're not connected and following each other on Instagram, on social media at Official Matty A, give me a like and a follow. Would love to connect with you there. And of course, don't forget to get on my deals list. If you're an accredited investor, you want to look at more deal flow. You want to see what deals I have access to, what deals I'm raising capital for. This is an exclusive list that I only put out to my accredited investor list, my Millionaire Mindcast family. So text the word deals to 844-447-1555. And with that being said, thank you again so much for supporting the show. Until next week's episode, keep investing in yourself and your wealth on your march to $1 million and beyond. Cheers.